Second. So I was able to actually do this in my last two classes without spilling anything or anything happening. Oh, can you see me?
Yeah.
Okay, cool.
Yes.
You might want to max it on your. Okay, can you see that?
Yeah.
Okay. I'm going to see if I can get like a Zoom kit so that I can do these lectures. That doesn't look too bad, does it?
It looks fine.
Okay, cool. So what I would do is you may want to take some notes around this, and I'll walk you through it. This lecture I pulled together maybe 7 years ago as I was working with a energy company where I just got done working for the insurance company, and then my background in real estate. So my expertise is in alternative assets. And then what I did is I took all that knowledge and applied it to modern portfolio theory, really laid out, the theory laid out by Markowitz. And I looked through the book, and I've looked through other books, and I don't think they do a really good job of applying modern portfolio theory. So I had to create my own lecture and my own theory, applied theory, using Markowitz's original work and a lot of the work that had been developed over the last 30 years, and then really apply it in a way that I think is actually valuable. And a lot of you have already done a lot of this. You've been through a lot of this theory by working through the quiz in the midterm and going through my classes in 135 or 123. You've seen this before, but I think it's a really valuable model and a really valuable tool for you, so I wanted to present this to you guys. So what we have here is the, I know it looks like a bunch of garbage right now, but once I lay it out, you'll see that there's actually some order to this chaos. So the first thing that you're going to want to do, if you're going to follow along, is you want to set up the graph, okay, where you have basically expected return on the portfolio on the y-axis, and you have the portfolio standard deviation or the risk of the portfolio on the x-axis. So that's the starting point to the theory. Then what you want to do is right here at this intercept is to draw a line up to here, okay? And this line from here is called the capital allocation line, or the CAL, okay? And the intercept of the capital allocation line to the expected return on the portfolio is the risk-free rate. You could use the 10-year Treasury yield, that's the benchmark interest rate. So that's the first thing you do when you're laying out this model. The second thing that you do is you draw a dot right there, okay? And then from the dot, what you're going to do, excuse me, I got to clean something up. Then what you want to do is the first step in teaching this, and you guys might want to teach someday or explain this to an institutional investor, is you'll, from the dot, you go here, there, and draw a dot. You go from here to there and draw a dot, okay? Then what you're going to do is go like this, 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 and this. That's the Efficient Frontier umbrella. And every spot along the Efficient Frontier, every spot along the umbrella, and every spot inside the Efficient Frontier are actual portfolios that we can construct from assets that are available in the capital market. We can pull them together and construct feasible portfolios. So the feasible portfolios, the ability to construct these portfolios, are feasible by pulling capital market instruments. But I can't build a portfolio up here of high return and low risk. There's no capital market products available to do that. I don't want to build a portfolio down here of high risk and low return. That doesn't make sense. So investors' preference are reflected in the utility curves, And most investors, risk-averse investors, want to be up here. They want to have high return with low risk, but there's no product available. I can't construct a portfolio like that. So they have to lower their expectations, their utility, to the point where their utility line, their utility curve, is tangent to the capital allocation line and tangent to the Efficient Frontier. The point where the utility curve is tangent to the capital allocation line and Efficient Frontier is the point where that is the market basket. That's the market basket. So that market basket, if you continue to put the dots out there like this, expect a return on the market, dot, 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 market portfolio standard deviation, this is the point, that is the point where the return to risk ratio, the risk adjusted rate of return is maximized. Okay? But some investors want a higher rate of return. So they say, give me a higher rate of return and I'm willing to take a higher, level of risk. I want return. So what they can do, and what you want to do here, is this point right here is 100% stock portfolio. So yes, I'm going to get high expected return on the portfolio, but I'm also going to get a high portfolio standard deviation. I'm willing to take on more risk for higher rates of return. Got it. And investors are willing to do that by selling off their bonds and start buying more stock and having a higher allocation of stock to the point where they have 100% of their money in stocks. Investors can also move down the Efficient Frontier by selling off their stock, start buying more bonds. Yes, they're going to get a lower expected return, but they're getting significantly less risk. And the investors are saying, I want less risk, I'm willing to take on less return, but my real concern is I want less risk, and I'm willing to take less return. The investors also, some investors are more risk neutral, opportunistic. They say, you know what, I'm actually willing to take not only more risk, but a lot of risk to get more return. So what I want to do is I want to jump off the Efficient Frontier and move up the capital allocation line to get more return, but I'm taking on significantly more risk. And the way that they do that is they take on leverage. And two examples of leverage would be, I buy a house, I put up the down payment, that's my equity, I borrow the rest from the bank, I'm levering up my equity. As prices go up, because I use borrowed money and I put a little money down, as the prices go up, my return on equity grows exponentially. But if the prices go down, the return on equity collapses in an exponential rate. So leverage is a two-edged sword. Now I can lever up my real estate exposure by using mortgages. I can also lever up my stock equity returns by using margin. So I can buy stock using margin. And by doing that, I can significantly increase my return on equity in my stock investment, but I'm also taking on significantly more risk by doing it. Excuse me. Also, there are other types of investors that are more risk averse, such as banks. And the banks say, you know what, I'm willing to take significantly less return, but I want significantly less risk. I'm more focused on reducing the risk than I am in than in the returns. So what those investors can do, the banks, is they can actually jump off the efficient frontier, move down the capital allocation line through the process of lending. So yes, they get a lower expected return, but they're getting significantly less risk, and that's what they want. And the banks, the way that they mitigate their risk is they're more than happy to lend me the money, the mortgage money, but my house is the collateral for the loan, so that if I ever default on my mortgage payment, the bank will foreclose on my property and take my property. So I don't own my property until I pay off the mortgage. But the bank can basically mitigate its risk through lending by collateralizing the asset as collateral so they could foreclose and take my property if I default. Same thing with the margin buyers. If the margin buyers, if all of a sudden the stocks drop and I get a margin call from my broker and I don't put up the money, they're going to liquidate my securities and they're going to pay off the margin account, the margin money that I borrowed from them to buy the stock. Now, historically, if I was an investment advisor or stock broker, going back to the 1920s and 1950s, if I was constructing portfolios on behalf of my institutional and retail clients, I really only had two asset classes to choose from. And what's fascinating is over the decades, new asset classes have emerged that warrant exposure into those asset classes. So let's say between 1920 and 1950, there was only stocks and bonds. So for risk-averse investors, I would put 70% of their money in bonds and 30% of their money in stock. But in the 1970s and the 1980s, we saw a new capital market emerge, the real estate market, and new vehicles to be able to expose to the real estate market started to emerge, and Ibbotson and Associates, who does these portfolio analytics, ran the modern portfolio theory, putting direct commercial real estate into the portfolio. And since real estate has low, no, and negative correlation with stocks and bond returns, it had a major diversification effect on the portfolio and made the investors better off. So Ibbotson recommended that all institutional retail investors have at least 10% of their portfolio in direct commercial and residential real estate, thereby taking 10 percentage points from the bonds. So this was a major shift in the 1980s and was institutionalized through ERISA, which was a pension fund policy that basically stated that all pension funds should have at least 10% of their allocations in real estate. That was huge. And then in the 1990s, Ibbotson did the analysis again and said, hey, there's an asset class that's been out there for a long time that has major diversification benefits. It's cash value life insurance. You fund these life insurance policies, you build cash value. When you pass away, the death benefit pays out. You don't pay any, your heirs don't pay any taxes on it. It's a major benefit. It stabilizes the portfolio and mitigates the volatility and doesn't really compromise the expected rate of return on the portfolio. Boom, another innovation in allocation and portfolio construction. And then in 2000, some research was conducted by Deutsche Bank Reef, and they ran the analytics again and said, oh my God, there is another asset class out there that acts a lot like bonds and real estate. It's alternative renewable energy.
Professor Souza?
Yeah.
Would you mind putting the camera down a little bit?
Yeah. Thank you.
Thank you.
Will that do it?
Yeah.
Okay, perfect. So Deutsche Bank ran it, said there's a new asset class that's emerging that you need to have at least 10% of your portfolio allocated to, and we're going to take it again from the bonds. And that's renewable alternative energy. Wind, geothermal, biogas, solar farms, wind farms, all of those alternatives. And this portfolio allocation, 40% bonds, 30% stock, 10% real estate, 10% life insurance, 10% alternative renewable energy, is basically your target portfolio, your model portfolio for the next 30 to 40 years. And these new asset classes, the real estate, the life insurance, and the alternative renewable energy, their returns have low, no, or negative correlation with stocks and bond returns. These are called alternative assets. This is one of the fastest growing areas of investment segments that's been going on for at least the last 10 years. And there'll be more investments and more innovation within these asset classes. But what's interesting about it, if you were to run the portfolio analytics and include these 3 alternative asset classes within your stock bond portfolio and rerun the efficient frontier, because they have low, no, and negative correlation with stocks and bond returns, it actually bows out the efficient frontier, pushes it out. It reduces the expected return, but it reduces the portfolio standard deviation even more. So the expected return on the portfolio goes down, but the portfolio standard deviation goes down even more, which means that the risk-adjusted rate of return on the portfolio actually goes up, which means that you, as a risk-averse investor, are better off. And if me as the portfolio manager, can actually lock in a expected return on the portfolio of 8 to 10%, then me as the fiduciary, the investment advisor, can double the portfolio in less than 10 years. And that's what they want. So if I can lock in a 10% rate of return for my investors by constructing this target portfolio, I can double their money in 7.2 years. Done. The money will start to flow in to my investment company. And if I'm managing $1 billion at a 1% assets under management fee, that's $10 million a year. If I can do another billion, 2 billion, 1%, 20 million. 3 billion, 1%, 30 million. Do you understand why Goldman, Merrill, Morgan, JP, all those guys are doing, Schwab, Fidelity, Franklin, why they're doing what they're doing? So that's basically the goal. Here's 2 more things. How much time do I have?
We got like 25 minutes.
Perfect. Perfect.
15.
Perfect.
15? Sorry.
No, that's cool. Perfect. So there's 2 more points that are extremely important to talk about. One is that for high net worth individuals and other individuals, particularly people of leadership roles, who are running family offices or corporations or sit on boards of nonprofits or for-profits or managing their own family office or managing their own families and other families, we as principals we have huge intrinsic value and human equity, human capital embedded in all of these networks. And if something was to happen to us, that it would destroy and impair a lot of those networks and those linkages of those institutional arrangements. So the life insurance becomes an extremely innovative product, even though it's been around 167 years. Anybody that has huge responsibilities has a ton of life insurance, and they got to pay out all these premiums. That's going to reduce the expected return on the portfolio. But what happens is, if something ever happens to them and they pass away, the death benefit associated with the life insurance will be injected into the estate, into the portfolio. And that cash infusion jacks the expected return on the portfolio and moves the stakeholders and the beneficiaries up onto a higher utility curve, which is where everybody wanted to be from the very beginning. So life insurance is basically a human capital arbitrage. It's the only vehicle out there that allows investors to actually move on to a higher utility curve. And the death benefit will be able to hire people and mitigate the damage, and will also be able to pay off the taxes and pay off the loans associated with the estate, and everything will go to the heirs at a stepped up basis with no taxes and no debt. It's freaking unbelievable. So it's brilliant. The last thing is I can bow out the efficient frontier and increase the risk-adjusted rates of return on the portfolio through alternative asset diversification strategies. So that's more traditional. But I can actually engineer the bowing out of the efficient frontier by using financial engineering. I can put together risk management strategies, or I can use existing derivative contracts to hedge off the risk embedded in my portfolio. So if the values or the cash flows, I am anticipating from a recession or financial crisis, that the value and the cash flows of my portfolio are going to drop significantly, I can engineer a hedge. I can implement and install portfolio insurance by basically taking positions in derivative contracts. So I can financially engineer the solution by using capital market, risk management strategies, and derivative contracts. So if I think the value of my portfolio is going to go down and the cash flows are going to go down, and I want to lock in my expected return on the portfolio, what I would do is I would write forward contracts and write futures contracts and write calls on futures and buy put options on futures contracts, and I would sell short my ETF shares and sell short my stocks. By implementing those strategies, it's going to cost me to implement those strategies because they're not free. It's going to lower my expected return, but I'm going to lock in my expected return. And I'm going to lower the risk associated with my portfolio way more than the reduction in the return. Therefore, I'm able to increase the risk-adjusted rate of return on my portfolio, which is the objective and the goal. And if I can get an 8 to 10% net return on my hedged portfolio, I can double my money in less than 10 years. Boom, I'm done. That's it. That's the solution. Anybody have any questions or anything?
No.
No question.
No.
Okay, for some of you that was review. For others that was new. But this is what I see as the true application of a lot of the stuff that you've been learning. It's how do you actually apply it? Take it from a theoretical approach and actually turn it into application, and then communicate it with others to teach them and give them that knowledge so that they can have the intellectual defense that they need to be able to move forward more effectively in their careers, but also be able to take care of other people as fiduciaries in the asset management process. How much time do I got?
9 minutes.
Perfect. unless anybody else has any other, is everybody clear on where we're going? And then I think on Tuesday, what we're going to need to do is to, which you already should be moving forward, on the midterms. You should be moving forward on your memos. You should be moving forward on your technical analysis, fundamental analysis, and your active portfolio strategies. And if you want to set up a time for me to work with you over the weekend, you can send me an email or something, and we can schedule some time through Zoom, or I'll have some time on Monday mornings in the afternoon around my 135 class, and then I can spend some time doing some demonstrations to everybody on the fundamental intrinsic valuation worksheet, the technical analysis, and the active portfolio strategy again, because I've done it a couple times individually and for the class, but I'll do it again because I want to make sure that you guys are, that we're all going at the same speed.
Sounds good.
Okay, is this all okay? Is everybody okay?
Yep.
Yeah.
Okay.
All good.
So make sure, for those of you who haven't uploaded your stuff, upload your stuff. If you haven't done the stuff, then tell me I haven't done the stuff and I need more time, so that so that we're moving forward together, so we all end up at the same place over the next, 4 to 6 weeks.
Sounds good.
Got it.
Okay, well, thank you, everybody. It was nice to see you. Thank you for your attention. I hope you and your family are doing well. Don't forget to tell them how much you appreciate them, respect them, and you love them, because you never know what's going to happen.
Thank you, Souza. Stay safe.
Okay, you too, you guys. Bye, Evan. Bye, Jacob.
Thank you.
Thank you,
Kevin.
Professor.
Thank you.
Bye, you guys. Bye, Noah.
Thank you.
Bye, Logan. Bye, Blake. Bye, Jose.
Thank you.
Bye, Kayla. Bye, Jackson.
Dr. Souza,
Yeah.
if it's all
Bye,
right,
Spencer.
would you mind looking at my my folder
Yeah.
real quick? And I'm trying to figure out how to format it the way you want it
Oh,
to.
okay, cool. Yeah, hold on. Let me whip this back around.
No worries. Also, what was the name of that theory/graph that we just went over?
This is modern and postmodern portfolio theory. And my doctoral dissertation was based on some of this stuff. But the true, if I was to define it, it's called modern and postmodern portfolio theory applications in alternative asset strategies. Okay?
Thank you.
Yeah, and actually in this class, I'll be presenting my doctoral dissertation so you can get an idea of how you actually, apply this stuff. So we'll actually be doing some of this.
Okay.
Okay, so you can see how you actually use this stuff. Most people use it in the fixed income and the stock market, but I basically adopted the theory and then applied it to the alternative asset side, and then did the doctoral dissertation focused mainly on real estate.
Right.
Kayla, Logan, Reggie, did you guys have some questions before I take a look at Jacob's directory?
Yeah, but you can, I could wait.
Okay, cool. And then, let's see. Okay, what number are you?
15.
Okay. Now, what you want to do is you want to look at, excuse me, I would look at, some of these,
Yeah.
because they basically have already laid it out.
Here, Dr. Souza, mine shows something different right now, so I'm not sure if you have to refresh. or
Oh,
anything.
that's probably it. Okay. So
or whatnot.
So you're 15?
Yeah.
Yeah,
No.
Is this you?
I'm going here. Yeah, but it doesn't have everything in there for some reason.
Yeah, I'm trying to refresh it right now. Oh, there it is. Yeah, that's you, right? Yeah.
Let's see.
Yeah.
Yeah.
Yep.
There.
That's it. Cool.
So the PDFs, I basically did like a through my phone with a
Yeah, that's
taking
cool.
a picture, but
Yeah.
it's also like a copy.
Yeah, that's
So-
okay. Just make sure that when you upload them, if you're going to just do pictures, make sure that they're ordered. That you
Yeah.
go 1 dash whatever, 2 dash whatever, so that they sort themselves in an order.
Okay, so if you click into where it says Part 1,
Yeah. Oh, okay.
I can't figure out how to
Which
like
you can right click that and then rename it if you want to order it.
okay, it's the only issue is it has crossover between like the first 2 or 3 assignments, so I couldn't.
That's fine. That's fine. I
Okay,
mean, I'll
so-
figure that out.
Okay, so if this is okay, then I'll just rename it to what it has, and then should I leave the folders or just put it in a folder that says what it's got in there?
Yeah, and I'll reorg your folders. Just make sure you put all this stuff into the folders, and then I'll reorg it, and then I'll go through it.
All right. Okay.
Okay.
Sounds good.
Okay, awesome. Thank you for double checking. I
Yeah.
appreciate
No,
that.
thank you. You have a good weekend.
Thank you. I appreciate it.
All right. Bye.
And then Kayla, Reggie.
Yes. So
Hold on, Reggie. Did you have something? Reggie, did you want to talk to me? Oh, he may just be hung up or something.
Yeah.
So Kayla, what's
I have
happening?
next class with him.
Okay,
Nothing
cool.
much. Surprising.
Yeah, no shit. I almost lost it this morning.
Why?
It's just so different, and I'm getting the handle on it and everything like that.
Yeah.
But it's just so different, so foreign, and then it's
Yeah.
just a lot of work. It's just emotional and time consuming and draining,
Yeah.
and I gotta be in the garage. Although it's a nice
Trust me, I know.
garage.
I'm in my bedroom from 9:45 to 4:30. It's like back-to-back classes. I'm like, oh no, I can't do this.
Yeah. Yeah.
But I reached out. So
But I'm doing better now.
Yeah.
Coffee helps, and cocktails help. So.
Oh, that does help. That's after 4:30. So the lady I told you reached out to me or
Oh, who?
to me or whatever. It was the her name's Linda Ryerson.
Okay.
So pretty much what I had told her was like I emailed her saying like in regards to like how as a senior I think that we should be able to have an input on our education and our future investments.
Okay.
And like it wasn't really I don't think that we should have like a pass or fail grade or whatever
Yeah.
unless it's like brought upon. Then yeah, she had emailed me back, saying that like they were trying to get a solution.
Great.
And then my teacher today emails me saying that like St. Mary's was in like the SF Chronicle or
What? Are you
Yeah.
seriously?
Yeah. We were in like the SF Chronicle, I guess, because they had said the dean, the students or whatever, dean of students emailed the kids saying they have to come back to school now
What?
to get all their stuff from like the dorms.
Oh
And
shit.
the parents aren't happy yet. Oh, great.
Shit.
So
Oh,
yeah,
my God.
it's wild.
Yeah. Well, we made the Chronicle. That's great.
Yeah, I guess. Yeah. I guess.
I guess any publicity's good.
Yeah, that's true. That's true.
Oh, that's funny.
Yeah. So I just had a quick question. So
Yeah.
I was wondering, I'm number 16. If you could take a look
Yeah.
at
Absolutely.
my deliverable 2 for me, please.
Yeah.
I know I emailed you about it, but I bet you're busy, so.
No, it's cool. Yeah, usually I'm pretty swamped, and I have to kind of pick my spots.
Yeah.
And then which one are you?
16th, yeah.
Yeah, you had already turned it in, so.
Yeah, so I turned that one in.
Yeah.
Do you want me to add just like the picture of deliverable 1, like the
Yeah.
my cover sheet?
Yeah, just put in there whatever you got.
Okay.
And what I'm gonna do is probably, I don't know, I'm kind of bummed because I collected them probably too early, so I'll probably have to go out and get it at some point. But I got to go out there anyway at some point because I want to go get my shit out of my office.
Yeah.
And trick out my garage and make it like a command center with all my freaking computers and printers and all that stuff. And you know, I can run because I was running my business out of the college, and I want to have like all the freaking equipment so I don't have any computer issues. If one computer goes down, I got 3 more. You know, so.
Yeah, makes sense.
So I'll go get at some point I'll go get your stuff.
Oh yeah, I'm not really worried about it.
No, neither am I, because I already looked through it, and I have no doubt in what you did. It already looked really good.
Okay, cool, thank you.
Yeah.
And then just for the deliverable 2, so I did a separate folder for each thing. So I did like homework number 2.
Yeah, that's
and
great.
then homework Excel, and then homework websites. Is that fine?
Yeah.
Or do you want all homework in like 1?
Well, you know what? Yeah, just put them all in one.
Okay.
And just carry that. Just move these 2 into that one.
In there?
Yeah.
Okay.
And then use the deliverable 1 scheme. You know, like if you use, I mean, you already. Actually, yours is different. But if you use like Stefano as a model, you know, just replicate this, and then you don't need the statistical pretest, but everything else is pretty much the same. That turns to a midterm. That's the same. That's the same. That's the same. So it's basically the same.
Okay.
And that way,
I think I'm good.
yeah, and that way it'll give me some order to check this stuff out.
Okay, cool. Yeah, and then I spoke with Regina today.
Yep.
And this weekend we're kind of going to try and get a head start on the paper.
Cool.
She reached out to the other guy, but he's yet to respond.
He's probably not going to respond.
Yeah.
He's probably, unless he's, killed himself or, become an alcoholic or something. Usually those real estate guys get totally hammered, during these time periods. Their deals fall out,
Oh, yeah.
So I think what we'll need to do is we'll have to do our own stuff, do all of it the best we can, and then give it to them and just say,
Take a look, pretty much.
This is as far as we could get, without your input. And they may be mad at me for some reason, but I don't know. I already put like thousands of dollars into it already, so.
Why would they be mad though? I don't know. Like I feel like.
Well, they probably wanted it like 2 weeks ago. Or a month ago, but things change, and I didn't feel like I was under pressure to really deliver something, because I mean, if they were going to pay us $10,000, then I would have that thing freaking done now. But for $5,000 and they gave me 2, it's like I've already put $5,000 into it, my own time. So you guys will get it when I give it to you. But I want it.
So do you have? Go ahead.
Oh, I wanted to probably have it done by like the first week or second week of April. Try to get it done.
Okay, yeah, that's what I was just going to ask you, because I'm trying to get as much done as I can on it, so I can kind of like have it off my plate.
Yeah, cool.
Okay.
Because my goal is to try to get the majority of my classes and the majority of the students wrapped up 2 weeks before.
Yeah.
So I only have like 2 weeks to deal with everybody else, that's submitting shit late, or needs more time because they've got issues. But I'd like to get the majority of it, the students done and give them the last 2 weeks to do whatever they need to do.
Okay. Cool. Well, I will relay this message to Regina, and then I guess I'll touch bases with you this weekend or next week.
Yeah. Cool. Awesome.
Okay. Cool. Thanks, Dr. Souza.
Stay sane.
You too.
I've already made it this far.
Yeah, we both have. It's only a few more months.
I know. Cool. All right. Take care
All
of
right.
yourself. Good to see you.
You too.
All right.
Bye.
Take care.
Did you speak with Chinese President Xi before you urged Americans to not blame Asian Americans for the coronavirus? We noticed that you backed off of that language. I know you're speaking with him
No, I
again
did. I'm
tonight.
speaking to him tonight. It's scheduled to go tonight. I'll have a call with President Xi of China. Very good relationship. No, I didn't like when they came up, and it wasn't him. Somebody at a lower level, mid-level, we found out pretty much. But they made a statement that our soldiers brought it into China. No, it came from China. And, you know, we just signed a very big deal with China. They're paying us a lot of money in tariffs and other things. They never paid us 10 cents. Look, China has taken advantage of the United States until I came here with Sleepy Joe Biden and Obama and Bush and everybody else. I'm not blaming them. I'm blaming everybody. They were allowed to $500 billion a year they were taking out. We had trade deficits that were so large nobody's ever seen anything like it. And we've changed it. Look, now we're taking in billions of dollars, and we gave some to our farmers because China, you know, they targeted our farmers, and our farmers are very happy, and our farmers got to a very rough period because of what I was able to do. Took the money from China and gave it to the farmers, and we had plenty left over after that. Now we're going into a phase 2 negotiation with China, but we're getting 25% on $250 billion, and then we're getting a lot on money after that. So we've never had to deal with China. China took advantage of the United States. And you know what? I don't blame China for that. I blame the people that were right here because they should have never allowed it to happen. But the relationship with China has been a very good one. John?
Mr. President, did President Xi ask you to calm that language down or to not use that?
He never asked me to comment on that. Somebody might have spoken to somebody, but nobody spoke to me about it. I think it was time, though, because, you know, I talk about the Chinese virus, and I mean it. That's where it came from. You know, if you look at Ebola, if you look at all Lyme, right, Lyme, Connecticut, you look at all these different horrible diseases, they seem to come with the name, with the location. And this was the Chinese virus. But I don't have to say it if they feel so strongly about it. We'll see. But, you know, we just made a great deal with China, great hopefully for both parties, but we made a deal with China and we're going to do another one, it looks like. They want to do it very badly. Maybe they'll want to wait, like Iran, they want to wait to see whether or not Trump gets beaten in the election, because would they love to negotiate with Biden or somebody else other than me? They would love it. That's their best dream in the world. So many others. So there are some that maybe are, you know, waiting till after November 3rd, the election day. But I think we're doing very well. It would be sad if we blew all of the advantages that we have right now, because we've made unbelievable trade deals, whether it's Mexico, Canada, Japan, South Korea, China, and others. We have changed the whole thing around. Please.
Mr. President, earlier today you sent a notification letter to the nation's governor saying that you will soon come out with new guidelines about social distancing and other items. Do you have any data yet to suggest which specific areas of the country may have their guidelines relaxed, which areas of the country may have their guidelines?
I think Deborah will talk to you about that, and Tony in a few minutes, but I think we'll start talking about that, because we have to open up. We can't say, let's close. People don't want to close, John. I say it again and again. The reason I do, because I want you to report it eventually. Go ahead, Steve. Go ahead, Steve.
From President Xi, what do you want to talk to him about?
Yeah, it's his call. I mean, I'll talk to him whatever he wants to. I mean, you know, we'll have, I think, a very fruitful call. Have a good call tonight at 9 o'clock, please. Yes, in the back. We'll be talking about that. Yeah, we'll be talking about the virus.
Thank you.
Yeah, in the back first, please.
Thank you, Mr. President. Despite the jobless claim numbers today, the market rallied again. It's up over 4,000 points the last 3 days.
Yeah,
Marking,
record.
yeah, the largest chart since 1931. Do you think that the economic uncertainty has passed?
No, not yet. It hasn't passed, but it's come a long way. I think they think we're doing a really good job in terms of running this whole situation having to do with the virus. I think they feel that the administration, myself and the administration, are doing a good job of keeping very importantly people informed, because it was a great fear, and a lot of good things are happening. The mortality rate is at in my opinion, you'll have to speak to Deborah, Tony, all of the others, but in my opinion, it's way, way down, and that takes a lot of fear out. You know, it's one thing to have it, it's another thing to die. You know, when I first got involved, I was being told numbers that were much, much higher than the number that seems to be. And remember that people that have it, many people have it. I just spoke to 2 people, they had it, they never went to a doctor. They had it, absolutely had it, but they never went to a doctor, they never went to anything, they didn't report it. You have thousands and hundreds of thousands of cases like that. So you have to add that to the caseload also. And the people that actually die, that percentage is a much lower percentage than I ever thought. That's one of the reasons I say, look, we're going to beat this and we're going to get back to work. Yes, please.
Administration today, the DOJ announced charges against Nicolas Maduro for drug trafficking. They've designated him as a narco-terrorist. It's also expected that Venezuela is going to get hit really hard by the coronavirus. Does the administration see this as a weak point for the Maduro regime?
No, we don't look at a weak point. This is a serious problem for over 150 nations, the virus. I would say this, Maduro and Venezuela, we're watching it very closely. We'll see what happens. But that is correct. Those charges were made. Please.
Ago that you used the Defense Production Act on 2 minor occasions.
Yeah.
What were those?
We will give you that notification. We'll let you know. Okay?
Can I follow up on John's question about the classifying for counties? A lot of these areas have not done testing yet. Is it safe to say that the current guidelines will be extended into next week? Will you wait to change those guidelines until you have the data yet left?
I want those guidelines to go even when we're open and fully operational. And frankly, much of the guidelines, like shaking hands, maybe people aren't going to be shaking hands anymore. You know, Tony had mentioned to me, Tony Fauci, the other day that I don't think he would be too upset with the concept of not shaking hands. He was saying that the flu would cut down, the regular flu would be cut down by quite a bit if we didn't do that, if we didn't shake hands. You know, the regular flu, of which, you know, you have a lot of deaths and a lot of problems with that too. So I think a lot of great things are going to, when we're open, just to finish, when we're open, as soon as we open, that doesn't mean you're going to stop with the guidelines. You'll still try and distance yourself, maybe not to the same extent because you have to lead a life. But I think the time is coming. How about one more question? Go ahead, in the back, please.
Thank you very much, Mr.
Go ahead,
President.
please.
I also have 2 questions because I'm asking on behalf of foreign press as well. So one domestic question, one international. Domestically, you just tweeted the other day saying that it's very important that we totally protect Asian Americans.
Yes, I do. Very important to me.
But still millions.
Very important to me. We have to protect our Asian Americans. It's a very important. That was a very important tweet to me because I didn't like things that I was hearing. Please go ahead.
Well, what's the concrete measure that you're taking to combat the hate crimes against Asians?
Well, I don't know. All I know is this. Asian Americans in our country are doing fantastically well. I'm very close to them, as you know. And they're doing fantastically well, and I think they appreciate the job we're doing. But I did want to put that statement out, the social media statement, because to me, Asian Americans are a great part of our country. Thank you all very much. We'll see you soon. Thank you.
You've been listening to President Trump address the public. He was talking about the stimulus bill that he expects the House to pass. Of course, we have heard from Speaker Nancy Pelosi saying that the House will move swiftly on Friday to give final congressional approval to this historic $2 trillion rescue plan. The president also saying that the jobless claim surge is nobody's fault. Of course, we have seen those claims surge to 3.28 million last week. Also talking about President Trump saying that he will discuss this virus with Xi Jinping. The U.S. has now surpassed China in coronavirus cases, according to Johns Hopkins. Take a look at how markets are looking at the moment. U.S. futures higher 0.3%. This, of course, after we saw the first three-day rally since February for the S&P 500. Defensives were higher. Utilities, real estate led the way. We had the Dow also surging 21% from the low that it hit on Monday. Technically, the Dow just surging out of a bear market, the biggest three-day gain since 1931. Take a look at WTI because we are now seeing a little bit of a rebound this after slumping when the head of the International Energy Agency said that global oil demand is in free fall. Of course, this is also made worse by the price war between Saudi Arabia and Russia. Heidi.
Yeah, always still volatility seen in the crude markets. But Sherry, we're heading into the last trading day of the week here in Asia, and it does look like Asia will be following Wall Street higher after that three-day gain for US stocks. This is a positivity that we are seeing across Asian futures at the moment, pretty firmly looking like we'll see Aussie markets open there in the green, I should say, looking like indicated upside of over 4%. We'll be watching airlines with Virgin cut to CCC by S&P, Qantas as well after international airline passengers plunged 44% in the month of February. When it comes to New Zealand, we are seeing trading close to about 4% higher, this despite consumer confidence falling in data out this morning. In terms of other numbers that we're watching out for, China industrial profits dropping later today. That's expected to see double-digit declines for the first 2 months of the year, and really just getting that kind of data continuing to roll in to look at the impact on the Chinese economy. When it comes to Japanese markets, that open will be informed by Tokyo inflation, a core leading indicator for that nationwide price trend, and that's expected to show further weakness in March as well. Let's just flick it over to take a look at the state of play when it comes to FX. And of course, it was another declining dollar kind of story overnight, falling against all of its G10 peers. Dollar yen trading at 109. Aussie dollar seeing a little bit of respite just above that 60 cents handle. We are watching for just sort of the week of RBA quantitative easing, looking like it's gone pretty well so far for the first few days of its bond purchase program. Dollar yuan is another one that we're starting to watch, starting to get interesting because we had on Thursday the PBOC acting to stabilize the yuan after it has been underperforming. It set that yuan fixing rate at a stronger than expected level on Thursday, so perhaps a bit of a signalling of its intention to support the currency. Well, as we saw just a couple of minutes ago, President Trump is speaking as cases in the US have jumped to more than 80,000, surpassing that of Italy and now, according to Johns Hopkins data, overtaking that of China for the most infections in the world. Let's cross over to our reporter in Washington, Laura Davidson. Laura, despite the fact that we see these cases continuing to mount, President Trump continuing to talk about his intention to get the economy reopened across the country.
Yes, he said he would be putting out some guidelines, talking with governors of states about how to go about opening up their economies. It's a little bit unclear exactly what that would look like. He says he still wants people to practice social distancing, follow the CDC guidelines, but also go back to work and sort of resume life as normal. Those guidelines, as a reminder, said no more than 10 people gathering in one place. So that would be very hard to see how schools could reopen, for example, or many businesses could operate. He's talking about lightening those up, and that's been really concerning to both the president's own health advisors as well as outside advisors to say, look, if you let up the rules, let up the guidelines and restrictions on people moving around now, we could see a trend line of deaths and cases that are is already planted really just spike and see the virus, any containment that happened over these past 2 weeks kind of erase some of those gains.
And Laura, we're also hearing from Vice President Pence as the White House briefing continues that he expects the House to take up the stimulus bill tomorrow around midday. Tell us a little bit what's included there.
Yes, so this is a historic bill, in its size. It's about $2.2 trillion worth of stimulus for both individual households as well as small businesses, large businesses. There are individual cash transfers of about $1,000 a person going out to middle and lower income taxpayers. There's a big fund of money for corporations that comes with some strings attached on stock buybacks and CEO pay. There's a bunch of loans, including loans that can be forgiven to small businesses if they keep employees on the rolls. There's also a lot of funding in there for health professionals and hospitals to make sure that they're getting funding and some of the equipment that they need. So it's a massive bill. It's set to be voted on tomorrow in the House. It appears that it should pass. There's possible there could be some delays if there are some members who are upset with the process. So there would not be enough to block its final passage. You would just be looking at a delay of a couple hours, maybe even a day.
Laura Davidson in Washington, thank you very much for that. Now, President Trump and Chinese President Xi Jinping are set to talk later today. It comes after Xi called for stronger international cooperation to fight the virus outbreak at a virtual G20 meeting. Let's cross to Beijing and our China correspondent Selena Wang. Selena, what exactly did President Xi say?
Well, in terms of the phone call, this is a positive sign amid escalating tensions between these two countries at a time when global cooperation is needed the most. So at this virtual G20 meeting, you heard Xi calling for unity and cooperation among these companies in order to stave off a global economic recession. So China is asking for countries to implement strong fiscal and monetary policies, keep exchange rates stable, work together to stabilize global supply chains. And they also mentioned that countries need to reduce tariffs, reduce trade barriers.
doing?
It's warmer out here than it is in the house.
Really?
It's cold in the house. Okay, what did you do with the roasting pan?
It's up there. What are you doing in my room?
Oh, excuse the heck out of me.
What are you doing in my room?
I have to come get a few things.
Taylor Jones, a new Capital Director. Thank you very much for that. Plenty more to come on Daybreak Australia. This is Bloomberg. It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle.